Hey everyone, Jeff Dorman, Chief Investment Officer at Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the crypto market. And for those who like to read, you can go to our website, ar.ca/blog, and read That's Our Two Satoshis and read about what's going on in the crypto market. But this week, I am joined by my partner and longtime colleague at Arca and portfolio manager, David Nage. How are you, sir?
It's great to see you, Jeff.
Well, I'm wondering, first of all, thank you for picking up the slack for me last week when I was out and writing a great piece this week. I'm wondering, before we start, though, are your Mets going to have a good postseason, or what's going to happen here?
To be quite honest with you, I don't know if they're going to make it at this point. Yesterday was a tough pill to swallow. For those who are Philly fans, congratulations. We were in the ninth inning with men on second and third with 0 outs, and all of a sudden you guys shut us down. And our catcher probably had some of the worst swings I've ever seen in a professional at-bat. So congratulations to those Phillies fans. You probably are going to win the division. And by the grace of whatever God you may believe in, maybe we will make the postseason.
Well, great. For the rest of us who don't care about the Phillies or the Mets, let's talk about crypto, David.
Sure.
Look, it's been a pretty good 6 months or so. I mean, really, it's a funny thing. I've said this multiple times here. I've said that for as bullish of a year as this has been, I mean, almost every single thing you could think could possibly go right has gone right this year. Not even, and that's just crypto specific. And of course, you also have a pretty good, healthy backdrop with rates and the dollar and equities as well.
Mm-hmm.
But really, 80% of crypto assets are still down year to date.
Yeah.
Even the ones that are up, the big majors are kind of driving the overall excitement. Bitcoin, ETH, Ripple, Solana, only up in the 10 to 20% range for the year.
Yeah.
Obviously, there's a couple outliers. Your Hyperliquid's up 100% for the year, and a few other things here and there. Maple on the on-chain lending side, and a few outliers here and there. But for the most part, this has not been a great year for crypto, despite most people thinking it is a great year because of the strength of, like I said, the top four: Bitcoin, ETH, Ripple, and Solana. But the last 6 months has been fantastic. I mean, this has been a pretty bullish market. Yet I see people constantly trying to call the top, just saying it's over, the rally's over. This is the end. And it's interesting. Each month that people have been calling for this and been wrong for the last 6 months,
Mm-hmm.
they keep coming up with sillier and sillier reasons for why we're hitting some sort of a top based on past historicals that just don't really make any sense in the current environment. And September, another one, people just talking to seasonality, saying, well, this is the top because September has historically been bad.
Yep.
Is that real? Is that a myth? I mean, what really happens in September here?
Yeah, it's interesting. I looked into this because, like you, I kind of felt this sentiment is there's a lot of things, there's a lot of headwinds going to the industry that should be pushing sentiment, should be pushing interest, across the board. And we'll talk more about that. But when you look at Bitcoin, obviously, that's the one that always is talked on mainstream media, the CNBCs of the world, the Andrew R. Sorkins of the world, who are talking about Bitcoin all the time. Look into it. And you look at the 1 month, it's down about 7%. And you're looking at, kind of this idea of quote unquote red September, or, what I, looked at the September effect. And if you look at it, over the course of the last, 10 or some odd years, Bitcoin falls on an average of 3 or 4% since 2013. And so, yes, there is this period of time, and it could be associated to many different things. But at the same time, it could be associated with what's happening now. Are we on a risk on or risk off type of environment? Do global macro investors see this as, the tariff wars? Do they see this as a reason to kind of bow out of risk assets? Not if you look at what's happened, with the SPX and some of the tech stocks over the last few months. NVIDIA after Liberation Day. I remember after quote unquote Liberation Day, NVIDIA went down to about $90 a share. And then all of a sudden, over the last few months, shot up to about $185 a share. And so it really, I wanted to look at kind of, does this happen every single year? And it does look like there's some, kind of notifications and data that, yes, there is a little bit of this kind of September dip. But, if we pull back, I wanted to see, okay, fine. Price being price. I'm a VC, as we know, and we lament about all the time internally. VCs have different perspectives. I look at things 5, 10, 15 years down the road. Sure, Bitcoin is down, as I said, about 7%, in the last, 30 some odd days, but there's so many things that are going in the right direction. For instance, Binance had a report in August where the number of publicly traded companies holding Bitcoin doubled in the first half of this year compared to 2024. And so there's a lot of other things, especially from the macro and the kind of the regulatory side, which we'll talk about in a second, especially from a venture perspective, where there is good data that's happening here. And I think this is something that you've addressed for years. You have an institutional investor, you have a family office, you're talking to the CIO of a family office, and they hear Bitcoin and they say, okay, oh, that's digital gold. Or something, oh, that's an inflation to, that's a kind of a hedge against inflation, or that's a store of value. And a lot of them don't know how to prosecute this, or how to really think about it. One of the things I was thinking about is, okay, you're dealing with a Fed that just saw, today, it looks like there was a revision of about 911,000 jobs, for the last year. You of all people know, that the Fed, kind of put has always been out there. You have, Powell that's probably going to get blasted for being too slow again on rate cuts. And so what's the relationship between rate cuts and Bitcoin? The way I think about it, and the way this is me personally, again, everyone has a different flavor of how they think of Bitcoin. Some of it think of it as rocky road. Some of it think of it as rum raisin. The way I think about Bitcoin is kind of an insurance against, premiums against kind of, fiscal issues. Humans make errors all the time. If you believe that Jerome Powell's made an error in kind of being too slow, then, Bitcoin could actually be your insurance against that. And so this is the relationship, whether it's inverse or, kind of in coherence with it, that Bitcoin is, what's happening in this global market right now. I think this is very interesting to review. But besides that, as I stated, there's a lot that's happening that's positive in this market beyond just Bitcoin. And that's why I wanted to kind of explore that. Because so many people just get myopically focused on just one asset, and there's a lot of things happening beyond that.
Well, let's unpack that a little bit. You went in a lot of different directions there, more so than I thought we'd go in. So let's break each one down. So let's start with the seasonality, right? You had a chart in the two sats talking about how September on average is down 4.5% for Bitcoin. There's only 2 months on average that are ever down, August and September. And September, like I said, average down 4.5%. But if you actually break that down on a monthly basis, over the last 10 years, there's been 5 up months and 6 down months in September for Bitcoin. Yeah. And if you actually wonder why the average is so low, it's actually being driven down by what happened in 2014 when Bitcoin was down 19%. Yeah. So, again, averages are always tough, right? You could have 9 up months and 1 down month, but that 1 down month down 90%, and it takes the average down. But the reality is September is historically a good month. So again, these are just stupid numbers, I think, is a better way to think about it. And also, if you're calling the top because September historically is lower, again, based on the fact that on a one big data point from a completely non-relevant 2014, then you'd also have to look at October and November, where October averages a 21% gain for Bitcoin. 29% gain, and November is a 38% gain, and December is a 12% gain. So, calling the top based on averages that are completely nonsensical when you think about the growth of what Bitcoin has become, and also ignoring that if you're going to say that, then you have to look at the fourth quarter, which is historically just rocket ship higher. Yeah. It's just sort of a poor argument, I would say. I would also just argue that everything that has happened in Bitcoin's past is largely irrelevant now that you have DATs and ETFs, which are driving the majority of the flow, right? So it's comparing a calendar or seasonality when the entire market structure has changed is just silly. And I would also just say, as you mentioned, when you look across all other assets, just like the stock market tends to break down between large caps and small caps, there are times when large caps do better than small caps. There are times when tech does better than healthcare or financials. And you look at that, and it's the same thing here, that part of the reason Bitcoin is stalling is not because the market is getting softer. It's because, the large caps have been the only ones that have been higher year to date. And all of a sudden, some of the small caps are starting to take off. I hate the term alt season because I think it's just incredibly misleading and stupid term, but a better version of the term alt season, if you believe in that, is just a rotation from large caps into small caps, no different than when the Russell 2000 tends to rally against, the Dow. So there's just a lot of
growth versus value.
I'm sorry?
Or growth versus value.
Yeah, sure. Either way. So there's just too many pieces in this market now to just for anybody to just look at historical numbers like this and try to draw conclusions. It just feels really to me like there's too many people in crypto who are just anchoring to the past, right? These 4-year cycles, these alt seasons, these seasonality charts that are just completely irrelevant now and have nothing to do with what drives the market anymore. And again, I'm not saying it didn't at one point, but it absolutely does not now. And anybody who is still making these arguments on this past data, to me, just looks absolutely foolish and incapable of taking in new information that has come to light in the last 4 to 5 years.
Yeah, I think, what I was alluding to on that is that, yes, there is this chart that exists. And yes, there is this, notion of red September. There's this idea that September is bad. And if I'm putting myself in an institutional, allocator seats, and they could see that and could say, well, now is not the time for us to get involved in this because September is bad. And that, takes away from all the other things that are happening within the space, especially in the last 7 months, that really give more of a reason to actually take a look into this asset class beyond just, one, asset that perhaps has some seasonality towards it. Like, as I alluded to, one of the bigger stories last week was US Bank coming back in. They resumed Bitcoin custody services for institutional clients. They're reopening our product that they launched in 2021, but suspended in 2022 when there was regulatory scrutiny and obviously choke point 2.0 and some of the other things that were happening in the space. And so this is, one of the kind of the catalysts of this was that there was rescission of the staff accounting bulletin 121, which in the past have required banks to carry custodial crypto assets on their balance sheets. That has had a recent rescission on that. And so now you're starting to see US Bank coming into it. You've had the CEO of Bank of America Brian Moynihan say, okay, now that we have Genius, coming through and being signed, we're getting ready for a stable coin here at Bank of America. You have JP Morgan that has been, flirting with us, even though Jamie Dimon, every single time he gets on air, says that crypto is a scam. They're building with it right now. And so the other thing, too, there are 2 other things that happened last week that were really interesting, is that Polymarket. One of the hottest, if I say, companies that many people play with, use. If I'm watching ESPN, they're always looking at Polymarket, market, predictions now. They just received full CFTC regulatory clearance last week that they announced. And so, as I said, yes, there is a chart where people say there's red September, that things are bad in crypto, and now is not a time to look into it. But that would be really short-sighted and not looking at all the positives that have happened. And, last note, and then I'll let you jump in, BlackRock, who obviously launched the IBIT, this year. There's data out there right now, which I cited too, that they have become the 2nd largest holder of Bitcoin after Satoshi. I mean, that's BlackRock. That's the biggest asset manager in the world. And so if they're doing it, and Harvard and Yale and some of the endowments, I think, bought like $116 million worth of the IBIT in the last few weeks. If you're an institutional investor, sure, yes, there could be this chart that you look at in terms of the seasonality of Bitcoin, but that would be missing the entire forest just for a trade.
Well, I think the bigger issue is I think very few people will deny all of the positive developments that have happened in crypto this year, whether it being from actually from the White House itself, or whether it being from various regulatory bodies, the SEC, CFTC, whether it's coming from new entrants in the banks and brokerage world. I mean, I don't think anybody can deny that crypto is moving in the right direction. I think the harder thing for a lot of investors who don't really study the space, 24/7, is that the majority of the assets that exist today in crypto are not going to benefit from any of that, right? And I think that's where the issue is. It used to be 4 or 5 years ago is that if you heard a positive headline on some gaming asset, that asset could go up 1,000%. Or you heard about some new thing called DePIN or DeFi or whatever, or NFTs, right? There was always something that you could be like, hey, I just need to be first. I don't need to be smart. And if I get ahead of this, I'll make some money.
Right.
Now, where you look at the tea leaves of kind of where some of these developments are happening, and it's like, okay, Bitcoin is its own animal. Obviously Bitcoin doesn't really do a whole lot, but it is a $2 trillion asset that is, well integrated now into both TradFi and to crypto rails, and obviously is going to continue to exist. But there's not a lot of other things in the crypto market that benefit from Bitcoin's success or failure, right? Everything else is pretty far removed other than loose correlations from algo trading shops. Then you look at, okay, well, stablecoins, obviously through the Genius Act, as well as just sort of organic growth, not just Tether and USDC, but what you're seeing with Athena and some others, stablecoins are clearly probably the best asset to exist on blockchain rails. Like if you just say to someone, like, what is a blockchain? A blockchain is meant to move assets in the same way that the internet moves communication. The first asset to move on a blockchain rails happened to be Bitcoin, but the best asset to move on blockchain rails is probably stablecoins, right? Just moving dollars. So we know that's going to persist and grow. But again, who does that really benefit? It's not going to benefit your random gaming asset or your random DePIN asset. It's going to benefit, a handful of protocols that actually carry these stable coins. Right now, Ethereum having a massive lead and Tron second, with Solana kind of a distance third. But it might be one of these new chains like Plasma that benefits, or even a chain that hasn't even launched yet. So that's one area that can benefit. And then you look at, some of the banks and brokers getting involved and ultimately moving stocks and bonds and real estate on chain. And again, it's like, that's not going to benefit most of crypto. It's going to benefit a few areas of crypto. It's going to benefit a few layer one protocols. It's going to benefit stable coins. It's going to benefit the DeFi assets that are able to use, these tokenized stocks and bonds on chain as collateral. I think that's the issue most people are having right now is that, there's this wishful thinking that seasonality and alt season and history is going to matter. And it's just, quite frankly, not. I mean, we're just moving into a new era of digital assets where the best of the best are going to grow beyond people's beliefs and not have these, 80% pullbacks. But the majority of the assets are never going to go higher. And you're seeing it this year. Again, like 80% of the assets in crypto are down year to date, even though Bitcoin, Solana, Ethereum, Hyperliquid, Chainlink, and a few others are doing so well. So I think that's the issue that a lot of investors need to openly face right now, is just say, like, if you're bearish on crypto, you're wrong. You're just wrong. Like, this industry is going to grow. But if you're just blindly bullish on all assets, you're also probably wrong. You have to actually be thoughtful and look for which companies and projects are actually generating revenue and will benefit from this growth that's happening, both in the TradFi world as well as the government.
Yeah, I would say, harking back to, some people know I like my history of technology. If you would have told the engineers at DARPA in the late 60s that all of a sudden billions and trillions of dollars were going to be transacting on e-commerce websites like Amazon, 40 odd years later, they would have been like, are you kidding me? And so what started as something, as you alluded to, just a communication rail, became something that became so much bigger and had so many different tentacles involved with it in terms of all commerce and so many things that we do on a daily basis that we take for granted. And so, sure, yeah, absolutely. Where we're getting to right now is we grew from Bitcoin, and then Ethereum came through, and then obviously some of the, different iterations around, Turing completeness, with Solana and Avalanche and the others out there. But where we're heading to right now is, as you alluded to, it's becoming much more focused on the user. How do users benefit from these applications? How does it, change their lives on a daily basis? How does it help them pay their bills? How does it help them with their kids? How does it help them with their health? There are things that actually we need to focus on in terms of users and what really benefits the user, and actually start to apply a lot of the infrastructure that we've been building for the last, 7 odd years to start building things that people really care about. I think we're getting to that point, as you alluded to. You're starting to see much more of a focus on applications that really matter to people and to matter to users, instead of just FTV or, what the kind of the float is, or kind of what, all of the token dynamics are. It's what is actually this being used for, who's using it. And also the other thing that, I think we're seeing too is, how do we make sure that the bots are just not, kind of generating tons of fake usage?
For sure. All right, well, we're bumping up on time here, David. One thing for those who don't know David that well, obviously I typically am the one who writes the Two Satoshis write-up. Every once in a while, someone else at Arca jumps in with an interesting topic. David wrote one back in February that I thought was amazing, kind of talking about looking at the new Trump and Republican administration in the same eyes as the Reagan administration from 1981 and what that looked like. Showing that typically the market does kind of negatively react to this new administration before ultimately rising. Obviously, 1981 also similar to what we're coming out of with a highly inflationary regime. 7 months later now, how right were you in terms of kind of drawing those parallels to 1981?
I will never say that I'm 100% right, but I'm feeling pretty good about where I am right now. I think when I wrote that, at the beginning of the year, February, especially after the inauguration, it felt like it just felt like hell, felt like draconian, felt like, everyone was like, this big kind of negativity, if you will. And so what I did, as you alluded to, is I looked back and said, okay, is there any corollaries? Is there anything that we can learn from history? And so much can be learned from history. And, I looked back, as you alluded to, and it took a few months for the Reagan administration to get their footing, to start implementing some of the policies that they had talked about. And as you saw, in the what was the liquid market back then with the S&P 500 and the Dow, the indices, started to rebound after a few months, after some of those new policies started to come into effect. And, as you see now, I listed it out on the Two Satoshis this week. January 23rd, you had the EO on strengthening American leadership in digital finance. And on March 6th, you had the executive order on establishing the strategic Bitcoin reserve. On the 18th of July, they signed the Genius Act. On July 30th, and if you haven't read this one already, please go and read this if you get a chance, if you're in crypto or not in crypto. July 30th, they released a comprehensive crypto policy roadmap, which is a 160-page report on everything, regarding the SEC, the CFTC, the Clarity Act, which is, hopefully going to give us some regulatory kind of clarity about what asset goes where, what is a security, what is a commodity, all this kind of migration. There is so much that has happened over the last few months. And, I think you're starting to see that the market understands that this administration, is really, putting their weight behind what they've said, that they believe that digital assets and crypto and Bitcoin are part of building this country into a powerhouse in this industry and innovation. And so, when I wrote it, lots of negativity, sentiment was really bad, especially in crypto. And, come back now, people are starting to see that, they're really doing things. It's not just smoke and mirrors.
Yeah, well, I would encourage everybody to go check out the most recent blog on our website, as well as there is a link to the one he wrote back in February, which again is proven to be pretty true and a pretty strong parallel to what we're seeing right now. So go to the blog, ar.ca/blog. Obviously sign up for it. You can get it in your inbox every Monday. But we'll be back again next week with a new topic. David, appreciate you joining us. And we'll be back again next week. Thanks, everybody.
Thanks, everyone.